Hey, it's Monday, January 6th. The holidays are over, and this is really the first day that I feel like we're kind of getting back to the normal trading. Um, a lot of the setups are starting to get back to their normal size of around like 5 or 6 points. So, like I've said before, I just kind of like I like the boring days. I don't really like too many large bars. I just kind of like normal boring days where I can take the same kind of setups and just profit from those. Let me pull up the daily chart. The most important thing on the screen is this big FOMC sell-off that happened here. The bulls are trying to get a double bottom here with these lows here and here. So they're trying to buy the market up, and a setup they had was this Friday from last week. Double bottom, bull bar, a little bit away from the moving average. So people that are trading the daily chart, some of them will be looking at this as being a double bottom and a possible buy setup above this bull bar. Their issue is the follow through bar. It's been poor, which is today it's been this bear bar, and today started out looking fairly strong. From the open to the high, it was up 35 points, but after midday, the sell-off was just relentless, and bulls really never were able to really get much strength. So looking at the daily chart again, double bottom, bull bar, but bad follow through. I think bears are still looking to get the market below here and test the 200 moving average, and possibly get lower, like down below this low here from November 4th. It might take a few weeks or months, but I do see the market would want to test back down here. Potentially this could be the start of a larger trading range. Let's say the market doesn't continue to trend up and we end up, somewhere around like 6,500 up here. If the market starts to stall around this area, I could see us being in a trading range through here for a few weeks or months. So going into today, there were two things that I had drawn on my chart. I deleted one. I'll put it back up in a second. But I have two gaps that I have on the chart. So the first one is from the open today to the high of Friday. So the market gaps up like that, and there's this big open space. The market really likes to fill those gaps. And we can see it filled most of that gap today here. There's another gap that we also filled today, and that's right here. So the low of this bull bar and then the high of this bear bar. The market gapped down here, and it never overlapped with the prices from this day. So we've actually had that gap on the chart for a few days now. And let me draw that in, and you'll be able to see what that looks like. So from the low of this day to the high, and so we filled that today. Now, as the market is gapping up and then moving up, when I see a gap drawn on the chart up here like this, that's, to me, when the market is moving in that direction, that's its target. It wants to fill that gap. So if there are buy setups, then I'm more confident in taking those buy setups, knowing that there's a gap up here that wants to be filled. Now, speaking about buy setups, I really didn't have too many buy setups on the open today, even though the market went up. I really didn't find any entries that I liked. You could argue buying above this bull bar or this one. However, I felt like this whole time we were pretty far away from the moving average, and we weren't really getting exceptionally strong buying. All right, so the moving average is the average price. And if we're way above the average price, that needs to be justified some way. It needs to be justified in us having exceptionally strong buying. And I didn't see us as having that. Instead, what I saw was big tails on tops of bars. First bar and these two were both strong, like these were both very strong bull bars, but in the final minute, they both sold off, creating this big tail on top. And then we had sideways bars here, a couple good bars here, but they're fairly small. And you kind of got that the whole way up. You also had an absence of gaps. All right, so think about the high of this bar. The market went above it, but then it pulled back below it. This tail here overlaps with that high. So people that are selling above this bar, they're able to make money. And if we're far above the moving average, we should have exceptionally strong buying. But if sellers are able to make money, then we are not seeing exceptionally strong buying. You could argue that this is a gap here, the high of bar 2 and the low of bar 4, and that is a gap. However, to me, it feels like it's nullified because the high of bar 1 and the low of bar 4 did overlap. So any sellers that sold above bar 1, then they were able to make money selling higher and scaling in and then getting out at their break-even point. So even from bar 1, sellers were able to make money. Like I said, bar 2 and bar 4, that is a gap, but I think there being overlap from bar 1 nullifies it because this is, I think this is the more important high there. Another reason that I found issues on trying to buy through here is there are lots of wedges. So, I'll show this first one. Bar 1, pullback. Then we had a pullback here, and then another pullback here. So we have this wedge, this 3 push pattern. And when I see a wedge forming, I get more cautious on trying to buy because a wedge is a reversal pattern. So possible wedge here, double top here, the high of this bull bar, and then the high of this bull bar here. It's a double top there. I think if someone was long through here, I think they should probably be getting out below that bear bar. Possible wedge, double top, lots of room to the moving average, and just inherently there were lots of reversals on the open. So there's a good chance that that the bears would be able to move the market back to the moving average after this double top and the wedge. Also, so when the market's at this point here, you could argue, well, why get out here if we have this target above and we're so close? And right, the market should be moving up to get to that target. And that's true. But some percentage of the time, the market will partially close the gap like this and then sharply reverse. So after a wedge, possible wedge in the open, double top, and good looking bear bar, I think if I was long through here, I just get out. And if there was a buy setup, I'll get back in. So possibly buying back above this bar here would be an idea. We see the gap did fill here at this point. So after that gap's filled, I'd be more cautious on looking for buys as well, because to me, our target was filled and market came right up to it exactly. Right. So much. I mean, the market's not random. It goes to certain prices for a reason. And it went right to that price and sold off because that gap got filled right there. So people bought up to it and then sold at that gap once it got closed. Let's move it higher. There's another wedge here. Different ways to draw it. You can draw it from here, and so first push, second push, third push, and then we also have another double top here, kind of similar to how we had here. We could look at on a lower time frame, it would be more clear, but we have a push here and then a second push that sold off. So this would be a form of a double top. So double top wedge pattern, far from the moving average. And the bulls have been buying for so long now and really haven't been all that strong. So I felt like good chance that there'd be sellers below that. My thinking, we're about 5 points above the moving average, so probably be good to go for a 5-point scalp. Wedges are, I think it's always reasonable to try to go for a swing trade on a wedge. So, maybe going for 2 times your risk on selling below that. This is what that would look like. puts you a little bit below the moving average. If on the open, like I said, there are often so many reversals on the open. And I think if you're finding a wedge pattern on the open, I think it's reasonable to try to go for a big swing trade. A lot of the times the market will pull back and it'll just pull back to the moving average, then it'll go sideways or it'll head up from there. But maybe 10 or 20% of the time you'll get a big sell-off like this. So 20% of the time, if you're catching the high of the day like this and getting a 40 point or more trade, well, that's a positive profit trade. But if you're getting short here, putting your stop up here, and then you're going for a profit that's way down here, that would be, let's see. So you're risking about 4 points to go for, let's say 40 points. Your profit's 10 times the size of your risk. So if you're going for that, that tells you you're going to lose the trade most of the time. So emotionally, if you're taking that, you need to be okay with losing. And, that's not going to fit everyone's personality type, which is why for some, it would be better just to go for the scalp and let it ride back to the moving average here. And that'll be better for some people. Others, it'll be better for them to try to take the trade, and they'll lose more often with a larger profit target. But when they do win, they'll have a very large win. So, it might take some work on your part identifying the kind of trades that you like to do. Once we did get back below the moving average, I was considering marking this bar here, but this is really just the first time the market is coming back below the moving average. What it has going for it is it's a bar closing below its midpoint, not too much of a tail on the bottom, and the whole body is below the moving average. My issue is that we have been having this trend, and trends need more to play out before they reverse normally. So I was hesitant on thinking about selling below this bar because it's really just the first time it's gone back below the moving average. I think it would be okay to try to take this for a swing trade. I would avoid trying to do this for a scalp. For the reasons that I mentioned, the probability would be lower. But if you're going for a swing trade, draw in, say, 2 times your risk. Maybe I'd even do more than 2 times my risk. Maybe do like 3 times and try to get out down here or more. Maybe that'll try to test the open. But because the probabilities are lower, because it's the first time it's going back below the moving average, I think if you're taking the short, it needs to be the swing trade to offset your lower probability. Now, why does this trade I have here marked have higher probability? Well, one, it's further along in the move, so we're more clearly bearish now than we were over here. Another reason, the market has the trend has more played out already because we have a second entry long here that's failing. So we have the high over here, and the market pulled back, and then we have this bull bar. And so when you see a first pullback in the market like that, that's called a first entry. Second pullback here, so the second time the market goes above the bar here, that would be a second entry. Then the market pulls back further, and then here we would have a third entry. And I think how I would look at this is really, I would just call this a second entry, because to me, I see this as one move down, pull back, and then a larger second move. So then this is a second attempt up by the bulls. So this is their second attempt up, and when the market tries to do something twice and then fails, it often reverses from there. So we've had this bull trend that is playing out now, right? It's transitioning away from this bull trend, and now we're getting a second entry long that's failing. So I think selling below this bar is reasonable, both for a scalp or for a swing trade. And if you're swing trading, you're probably going for at least that. So you're probably going for at least 12 points on that trade there. when the market is selling off like this, the areas to look at are the open. A market often likes to come back to the open and test the open. Other things you can try to look for are, trying to draw it in here, measured moves based on a gap. So where's the gap I'm looking at? It's right here. Market's moving down. We have the low of this bear bar, and then break out below it. And notice this pullback does not come back and touch the low of that bar. So what's happening there? People that are buying below this bar and scaling lower, they're not able to get out with a profit on their first entry. So they're trapped into their longs. And then as the market moves lower and lower, they're going to have to get out of those longs, which is what causes more rapid selling, like on this big bar here. So when I see gaps, that's an important thing to note. A lot of the times you will get a measured move from that gap. So we have the high of the move up here, high of the day. Let's move down. This is where the gap starts. And then you can draw a measured move on that, and that becomes a measured move target. And look right where the market came down to before it found buyers. So when the market is selling off, you can look for the open of the day as a target, as support, and you can try to find a measured move like this. That'll also act as a target. Market kept selling off. The bars got even larger. I have this bull bar marked here, and the reason I have that marked is because we have a wedge pattern. So I would see this as the first push, then a second push, and then third push. Now, we're starting to get the largest bars late in the trend. So, we've been, at this point, it's 210, and we've been trending since 1140. So we're 2.5 hours into this trend, and now we're getting the biggest bars late in the trend. So I'm always suspicious when I start to see large bars late in the trend. So we're getting that because that means the bears are getting overextended, possibly, right? If imagine you took a swing trade, like you sold up here or you sold here, and now you're up 30, 40 points. Are you saying, man, I'm going to keep on holding and I'm just going to keep on holding it? Or are you going to be at least selling out of part of your position and taking a profit? I think most people are taking a profit, maybe full profit or partial profit. I think if you've been holding on and you're 40 points up, I think it's difficult to not take at least part off. So a lot of people are buying back their shorts through here, which is why often you'll see bounces after large bars late in a trend. So we're having that going on. And then also this wedge, once again, is a reversal pattern. So I thought it was a reasonable buy above this. However, it was too soon, and you would have been stopped out if you had bought above that. For buying above this, I think you want to try to ride that back up to the moving average or back up to the open. And it would probably be in the form of two legs. So this is the first leg and then pull back. And we really didn't get much of a second leg, just this little move up here, and then the market sold off. But if I was buying, I'd probably be trying to go back to the open of the day in a two-legged move back to the open of the day. Last trade I have marked is really just a trend continuation move. All right, keeping it pretty simple. It's a bear bar, closing below its midpoint, and a bear trend. So it's also after a double top. All right, double top, bear trend, decent looking bear bar, and you would have been able to get a scalp out of that. I think a lot of people noticed at this point our gap would still be open here, right? And we can see we have the high of that previous day, the high of Friday over here, and the close over here. So I think if you're looking at the market at this point, I think a lot of people wouldn't just go for like a 5-point or a 10-point scalp. I think a lot of them are going to try to get back and to close this gap, or even back to the close of Friday. We can see it got part of the way, but didn't get all the way. But when you see a move on the open like this, that's fairly strong, but then ends up reversing, a lot of the time that market will just collapse during the last hour of the day. It'll just collapse down and you know, get way down here. So I think, I mean, this is fine for a scalp, but I think a lot of people also would be taking that for a swing trade to try to get another 20 or 30 points during the end of the day. And then, you know, I mean, these bars, I can mark this as well. 345. I was considering actually taking this short, and we can see that would have worked out. I just felt like maybe a bit too late in the day for me, but you know, in theory, you know, either of those would be fine to mark as well. So that's what we have today. Let me know if you guys have any questions, and I'll be happy to answer them for you. Thank you guys. See ya.